Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea with a really, really good conversation today. Thank you for David Gura, just in from Aspen, where he was at the defense conference interviewing Robert Gates, Robert Zoellick, and Michael Froman. The two together, Zoellick and Froman on trade, is just exquisite. Look for that out at The Big Take. It's really, really an important interview. I'll dub it right now. It's the interview of July across all of Bloomberg. Zoellick and Froman with David Gura on The Big Take. Our interview of the moment was Stuart Kaiser at Citigroup. I think we're in a bull market. He writes these really complex, future forward, lots of mumbo jumbo jargon stuff. And I asked him about the quants, the guys with a black box.
On the quant side, these are folks that, are really investing very systematically in
black box.
They wouldn't tell you. They understand the box, from a distance. We don't. Why are they, having some trouble? I would say that the S&P 500 realized volatility is below 10% right now. So the S&P is not moving very much. The factors that a quant might trade, style stocks, value stocks, growth stocks, those have been incredibly volatile, much more volatile than the S&P 500 itself. So if quants are under pressure, it's because the market isn't moving very much, but the tools they use are. And that sort of dislocation can be really tricky for them.
Stuart Kaiser, and let me pause there and talk about the idea. And when I came to Bloomberg, I was shocked by this, where all economists are the same. They're not. I think we sort of understand it. Academic economists, people like Adam Posen at a think tank, or Ken Rogoff up at Harvard, and others, and market economists that are very different, like Michael Feroli on today from JP Morgan. On the strategist side, and particularly equity strategist, again, there's all different shades. There's 28 flavors of equity strategy. And Stuart Kaiser is on a trading desk with risk in play, wicked short term at Citigroup. It's sort of like that TV show Industry in London, or even like Billions. It's like sort of like what you see Hollywood fake at Citigroup, except with Stuart Kaiser, it's a real deal. So he's looking at incredible short-term ideas. Brian Belski is a different flavor. It helps that Belski's been incredibly right about a bull market. But Brian Belski is looking much more long-term at the understanding that people have long-term investment and they may have short-term speculation, which is a trade of 6 months or a year, or dare I say long-term for Belski's, maybe an 18-month view. Here, Brian Belski of BMO Capital Markets on the moment at hand.
Well, because it is emotion, it's not based on the facts. You want to buy these companies that are masterful in their craft, that have amazing management teams, that have great cash flow, and have, I would say, binary decisions made about them that everybody agrees on, i.e., we're never going to use search again, which is ridiculous. Mm-hmm. And, oh, by the way, search was up in the quarter. We actually doubled down on Google, and we added it to our value portfolio because we love to buy broken growth. Oh, yeah. When the stock was down in April, we put it in our value portfolio. Why? Because it's a broken growth story.
Is Apple a broken growth story?
No, I think Apple is a cash machine. You never want to ever bet against the U.S. consumer. And let's put a semicolon space, and you never want to bet against Apple.
Brian Belski for too short a visit. We'll get him in for a much, much longer visit here in the coming days and weeks. I'll be honest, folks, like the banks I was interested, tech was like, yeah, okay, big deal. After what I saw from Google yesterday, I am riveted to what we're going to see in technology in the coming 10 days with the leadership of Caroline Hyde and Ed Ludlow on Bloomberg Technology. It's a podcast across the nation on Apple, on Spotify, and on YouTube podcasts. It's single best idea.